Hello, hello. We have another futures to discuss today real fast. I like this one as much as the Ethereum Mini Micro because of the way it moves. And it has nice charting because it mimics and mirrors exactly to UNG. If you go to TradingView or any of your preferred platforms, you can type in a UNG, and it's the natural gas fund, which funds, I'm sorry, doesn't fund, it mirrors this futures. So this way you can have it pulled up in your watch list easily among your other stocks and be able to watch it for movement and buy in or sell. Let's go down to Spectral fast. So you see here that I have one position because I bought this morning very early as it was sideways trading. I was expecting it to go up because it had dropped some, and that was the trend of the chart, and it has. So I thought it'd be great to do a little video for you now and go ahead and close this position. And as you can see here with the open profit loss, 71 matches 71 for the day because I have not opened or closed anything else with this contract in this last 24-hour period. And you can see as we're talking, it's going up. Why is it going up so much more than last night, which we did the Ethereum mini, right? The tick size is much, much smaller of a value to move because the actual price point or the unit number of the futures contract is different. The other one was following Ethereum's price point to the dollar. This one is following more of a contractual price point. It's not based on the stock because the stock is like 20 something dollars a share. This is 4. It is different. So because of that, your tick size is able to be 1, 2, 3 places beyond, which allows more movement and more money made or lost because of risk, right? So let's go down here real fast. Your tick size is a thousandths place, right? It's 3 over. Your tick value is $1. For every one movement of the thousandths place, or any of the decimals really, but it's $1 for every thousand. Sorry, I'm tapping too many things here, and that's why you can get $1,000 multiplier because thousandths place, you move 1 all the way up to a whole number, it's 1,000 moves, or in this case $1,000 because our tick value is 1,000 per tick size move. Whew, a lot of words there. Your chances of actually hitting $1,000 in your movement is very, very small within your 1 month contract. It has moved one whole place from 3 to 4. It didn't do that since January. So we've already had 3 contract expirations since then. So with the chances of it doing it again with this month, very, very small with one contract. Now, as you can see, our margin requirements is much higher. ETH Mini was 77 a contract. This is 512, much more substantial. Not incredibly expensive when you compare them to the full Ethereum or the full natural gas or the full Bitcoin futures. Those are tens of thousands of dollars per contract. Now, if you have the money and you want to try that out, you look at the tick size and tick values. They will be also substantially higher and more lucrative, also more risky. I hope that helps with the explanation of how this one compares to the Ethereum Mini, because they're both considered micros due to the requirements being very inexpensive in comparison. But they do have a lot of nice things about it because the tick size, the tick value, and obviously the multiplier is very, very nice for this movement. That's how I was able to get $76 in a move just today alone on this one contract. If I had two contracts at the same time purchased, obviously it would be double the income, right? Double the profit, triple, quad as you go up in contracts. Just like options, just like buying calls or puts, multiple contracts move you in a more exponential way. That's just common sense. It works the exact same way as options in that sense. Now, as far as risk goes, with these two I'm talking about, they're risky because you're leveraged, right? We have a higher leverage in this one at 7%, almost 8. I keep saying percent, I'm sorry. 7 to 8 times leverage of the UNG stock. So the stock might move $1. This will move not a whole point, right? We're not going to move this to 3 just because UNG moved. It's going to move in the tenths, hundredths, and thousandths more. And that's where you get the larger loss potential because you have a dollar move every time a tick placeholder moves. You have 1,000 different potentials, basically from 0.000 to 0.999, right? Lots of movement in there. So when you're buying it at $512 and it was to start falling pretty heavily, you can lose your value of your contract to the 512 per contract. All right. I hope that helps. Let's go ahead and close this out. And I like it. We can go over TradingView real fast and see what it's showing. So here's up here, you can see the United States Natural Gas Fund. It's UNG right there, UNG. Okay, boop, boop, boop. And you can pick that one, that's fine. And let's go ahead and get rid of this tab cursor, zoom into the daily, and let's go, yeah, we're 3 minutes. I like the 3-minute one for this because it's not going to be nearly as volatile and extreme as the SPY or the Qs, right? So it does follow UNG, or UNG follows the futures. I'm sorry, we're on UNG. So here we are, pretty much sideways, right? Now we are heading toward close in about 35 minutes. Market's going to close. It's Friday. I say let's just take this. It might track up a bit more. I might make another $5-10, but let's just take it. I like the way this is looking. You have the 50 kind of tracking up the bottom line. You've got these large 2 candles over here holding up the prior bull band. It's looking pretty good. Let's just slide back over. Let's just close this buddy out. All right, $73. That's lovely. You know, that's a nice dinner out, right? So unlike when you buy a call or buy a put, you sell them, right? You have to do opposites. It is like that with futures, except you're going to sell the 1, because over here we have just 1. So we're going to sell 1. You cannot manipulate the bid or ask numbers. In options, we can change them around, try to get the best bang for our buck. Cannot do that with options here. Our power effect, basically what this is saying is how much are we going to pay in? Well, we're not paying anything, we're selling it. So we're going to get back $73 minus those pesky federal fees. So commissions and regulatory fees take up about a little over $1 something, you know, $1.25. And that is going to be deducted off of our total profit here. This number up here, don't worry about that. That's my available number. That's my balance, my bank in Robinhood. So I can use all of that to pay for the contracts. All right, so one more time, we're at 72. All right, just, we're going to go in here. We're going to sell one, review, swipe, and boom, done. We made $72. All right, that's it.